Hey, what's up, guys? Houston here. Someone asked the question, should they go try to get a loan from their bank, okay, when they have good credit, or try to just stick it out with OneMain? Now, here's the thing about it. I continue to tell you guys, you can have a 800 credit score. The main thing that will deny you with your regular bank is that you may have too high of a DTI, debt to income ratio. Okay, so this is where most of the time OneMain actually falls in place. Now, granted, they only go up to $20,000. However, when you have a high debt to income ratio, plus you have bad credit, they're more flexible to work with you. But it just sucks that when you with a bank, you're in the 800s. And because of your high debt, they do not want to work with you. So that's the reason why OneMain can't come into play. Now, here's the thing about it. The difference between the loan that you would get from your bank versus OneMain is the way that it reports, okay? So if you get a loan from your bank, it's going to report as an installment loan, right? Now, with OneMain, it may report as a CFA. It may report as a consumer finance account, okay? Now, why that's important is because with consumer finance accounts, all right, when they report on your FICO 8 scoring, even after you pay it off, this can possibly reduce your FICO 8 score, okay, because it's a consumer finance account and is not registered as an installment loan. All right, so that's the reason why I tell people you have to be very careful when getting this. Again, most people would get this here loan because, you know, they have bad credit and they can't get a loan from their bank. Now, I have some other lenders on this here that would actually help you. Now, one of the questions someone else asks is, do I have to have a car to get a loan from OneMain? Actually, no. Well, I take that back. What it is that once you go over $10,000, then sometimes they want to collateralize something, okay? And usually it's usually about $20,000. If you're trying to get, I put it like this. If you're trying to get $20,000, okay, out of OneMain, they're usually wanting you to collateralize the loan, okay? And so that's one of the things. Now, a lot of people don't like it because, you know, you do the soft pull with OneMain, all right? And people say, well, why did they do the hard pull? Well, there's a reason why. The thing about it is if you actually accept what they actually offer, okay, that's when they do the hard pull. All right, first they're going to do the soft pull. And here's something else that you need to know. Many people, they end up getting denied again. And this is so important. People get denied not because of the credit score. It's because of the information that's on the application that's matching up with the third-party credit bureaus. So like with OneMain, they may pull LexisNexis, or they may pull Innovis on the back end, okay? Or they may even pull Teletrack. So it just depends on what system they're using, okay? And if the address and the name on that application is not matching up with those identifiers, with those credit bureaus, then that's why you may get denied, okay? A lot of people think, oh, it was my credit. Nope. Those other identifiers on your credit file is what ends up making you get denied, even for these other loans that I'm about to tell you about. Now, one of the things about it is that people don't like that with OneMain. And if you ever had a OneMain loan, put it in the comments, because one of the things that most people don't like about OneMain is that the interest, okay, you make payments on it and they're applying all the money toward the interest, okay? So the thing about it, if you get a OneMain loan, here's what you do, all right? I would tell you to take that loan and I would try to pay down as many small revolving accounts okay, small credit cards and stuff as possible. The reason is, if you do it that way, what ends up happening, that can increase your credit score. Then I would, sorry about that, guys. Then what I would do, I would go over to Credit Karma, okay? And so going over to Credit Karma, what ends up happening, you can dispute all your negative items. Now, the reason I'm telling you this is because if you can get your FICO score up to at least a 650 to 670, then you can take advantage of the Vantage 3 and Vantage 4 credit unions, okay? And that way you can get a higher limit loan to pay off that OneMain loan. That way you're not paying all of that interest up front, okay? And so with OneMain, yes, the interest is front loaded. Okay, so you're going to be paying on the interest first. So that's one of the things about it that most people don't like about it. However, if you're lucky to get a loan from them, then pay down those small revolving accounts. If you pay down those small revolving accounts and then dispute all the negative items through Credit Karma on your TransUnion and Equifax, then you can leverage that. And then you're able to go over to your Vantage 3 and 4 institutions. So like with BCU, okay, they have Vantage 3. You have Veridian, that's a Vantage 3, okay? So, and they are non-geo restricted. So that's the reason why I'm telling you that. Plus, with those type of credit unions, they would allow one hard pull and you can get 2 or 3 different products, right? So you can get multiple products from them. And again, being able to get enough capital from one of those credit unions to pay down that OneMain loan. So that's how you leverage it. Now, there are other lenders in the market that will offer you a loan, but again, the interest rates you may not be happy with. So like with Net Credit. So with Net Credit, yes, they will give you a $10,000 loan. Or at the same time, they will offer you a $4,500 line of credit as well. And I always tell people, take the line of credit, okay? Because once you take the line of credit, you only get charged interest on what you actually use. That's one of the biggest things that a lot of people are not aware of when it comes to a line of credit. You only get charged interest on what you actually used, okay? So that gives you more leverage. Now, here's another thing. Like with Opportune, the difference between OneMain and Opportune is a CDFI, okay? And so where income really plays a factor in terms of the amount of money that you're going to get from OneMain or Opportune. Because with Opportune, the minimum income you have to have after taxes monthly is $500, okay? So with OneMain, when you try to go to OneMain and stuff, they may be expecting you to have at least $1,000 after taxes, $800 to $1,000 after taxes, okay, in order to qualify for a loan with them. Then you have Avant. Avant goes up to $35,000, right? So they go up to $35,000. Lowest credit score is usually average about a 580, okay? But again, when I tell you, like with Avant, with certain type of lenders and stuff like that, it really depends on the income. And so usually like with Avant, your income usually should fluctuate between $35,000 and $45,000. So if you're like on a fixed income, okay, this here type of loan may not qualify you. If they do qualify you, they're going to give you the lower end in terms of, like, if you need $10,000, you're probably going to end up walking away with maybe $2,000 or $3,000. Now, if $2,000 or $3,000 is all you need, you might as well go over to the tribal lenders. And the reason I say the tribal lenders is because when you use those platforms, the interest rates are probably going to be the same thing, but you have a chance to at least get $5,000, okay? And that's like with Viva Payday loans, all right? Or Big Buck loans. because their interest rates start at 5.99. Another thing, again, I cannot stress this enough, and I always tell people, is when you need a loan, the best no interest loan. Now, there is a place in California, there's actually two places in California that do not charge interest on a loan, okay? And it's a Jewish loan, okay? And they give you up to $15,000, and they don't charge any interest on that loan. Okay. However, you have to be in California, in the Los Angeles area. Now, for you to get another interest-free loan is if you work a job, then you want to use your W-2 and file exempt. Okay. And you do that for 3 to 4 months so they can stop taking federal income taxes out of your check. All right. That's how you actually be able to bring home more money, and that way you may not have to resort to the option of being able to have to take out a high interest rate loan. All right. And another thing I continue to tell you, if you guys have like a car payment, you want to reach out to your car lender, okay, whoever your car lender is, and see if they would push back your payment. That way you won't ding your credit, but you probably have enough money to pay a bill or something like that to give you enough breathing room till your next paycheck come. All right. So there are options out here. If you have any questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thanks.